Hey everybody, this is Ryan Mallory. Let's talk about the Tesla stock here. My day trade that I made in it just the other day and how I managed to trade and was able to get as much as 11% out of the trade. First off, let's take a look at the daily chart here. You can see there's a huge run up of late, right? I mean, massive run up. It goes from 300 over the last couple months to as high as $969 a share. Massive run. But where did it all start? Where if you were looking to swing trade it, where would you have wanted to get long? Well, this resistance level here that I'm drawing, this is your breakout point here. It achieved it back in December, mid-December. It broke through that 372 area. Once it did that, it was off to the races. One of the most impressive breakouts you'll ever see. Did I swing trade it? No. I have traded Tesla plenty of times over the years. It really hasn't been all that bad to me. But back in 2018, when you started having all this 420 funding secured, going private talk, having the SEC investigate him, the weed issue, I got kind of spooked about it. I like to be able to sleep at night. I don't want to wake up to a stock that could be down 50% overnight. It's just not my cup of tea. So I kind of stayed away from it over the years. I have traded it here and there. Been pretty good, but nothing like what we've just seen of late. This past week when I saw that it went as high as $969, I thought to myself, okay, eventually this is going to provide some kind of a bounce opportunity. It's going to pull back. Not all stocks go up forever. It's going to pull back, and it's going to provide an opportunity to possibly play the bounce in a day trade. And that's what it did. I was looking at this 10-day moving average as a possible entry point into the stock. What was also cool is if you use Fibonacci retracements, you can see here that it coincided almost perfectly with a 38.2% retracement. That's awesome. If you don't know what Fibonacci is, it's basically a support resistance level that a lot of traders use to determine where the stock's going to pull back. 38.2% of a rally is a typical Fibonacci retracement level that a lot of people seek out. So it did that. It pulled right back to the Fibonacci level. I'll admit I was still a little bit scared of even considering this as a day trade. But when the things start aligning and it makes sense, I kind of wanted to take the plunge on this one. So let's take a look at the 5-minute chart. Once it hit $969, we saw a dramatic pullback in one day. It was a 20% pullback pretty much. That's like a bear market for a stock. I mean, stocks that pull back 20% are considered in a bear market from peak to trough. It already did that one day. But in any case, I thought there would be some kind of opportunity to bounce, that the momentum players weren't just going to let this one die right out of the gate. When it opened up on February 6th, it had this moment of like consolidation. It tried to open lower. It didn't really plunge lower like what we saw the day before. Instead, it consolidated. You started seeing the volume pick up a little bit in it. And that's when I sent out a message to the members of the Share Planner trading block that, hey, watch this thing. If it breaks above 710, it's going to be a good day trade. Or at least I think it will be. Who knows? But you always have to use a stop loss just in case. I have my stop loss at 659. Essentially, I was giving myself a lot of wiggle room to play with this, and you have to. When there's this much volatility, you got to give yourself a lot of wiggle room with the stop loss. You just can't go that tight because it's likely that you'll get stopped out by accident. So when I do that, as soon as I send out that message, as soon as I determine I'm going to get in at $710, look what this thing does. It just starts moving. I get in at 710. Before I can even verify where I got in at, this thing's already at like 715, 720, right? And it just keeps going higher. I mean, it was really amazing. Like I don't typically have trades that move up this fast, but because there's so much momentum behind the Tesla trade, because there's so much people on the street that are in love with this stock, people are using any kind of a pullback to get long on it. But again, I'm not going to swing trade this thing. I want to be able to sleep at night. And I don't think that Tesla right now, after the kind of move that it's had, that it provides the risk reward that I want to hold it overnight. But even though this breakout's nice, it could easily fall apart. So what I don't want is to have a strong winner turn into an instant loser on me and get stopped out for a loss. That's no fun, and it's demoralizing. So I got to protect not only my physical capital, but I also got to protect the emotional capital that I don't, just really bump myself out from poorly mismanaging a trade. I start to see it pull back here, and I get a little bit nervous, and so I'm gonna go ahead and book at least a third of my profits right here. I'm gonna take a little bit off the table. I want to make sure I'm walking away with some profits on at least a portion of this trade. I go ahead and get out at 740. Again, I'm primarily a swing trader, but I do day trades here and there when the opportunity provides it. This was definitely an opportunity that I liked, but I wanted to manage the risk. I wanted to make sure that I was coming away with a little bit of profit, and it stabilizes. And not only does it stabilize, it marches higher again. So now we're hitting like 773, and I'm starting to think, where am I going to take the next third off? So once it gets all the way up here to like 790s, I go ahead and book the profits of the next third of my position. I get out at 786. That's about 11% profit from where I got in at it at 710. Now we got a pretty solid trade. The first lot I got out 4% at 740. The next I got out at 786. That's going to give me about 11% on that third of position. But look, I can't go to sleep at the wheel at this point. I have to still take this trade serious. Yes, I only have 1/3 of a position left. I'll let it run as high as it wants to, but I have to manage the risk. Because guess what? If this thing falls apart, it can take all the work that I did on my first 2/3 of the position and make it basically a losing trade overall. So you still have to use stop losses. You still have to manage the risk. So what I do, I actually put my stop loss right here below this 5-minute candle. There's the thing with one of these trades here is that I don't want to put my stop loss below 738. That might be the most logical, but I want to make sure that I'm coming away with more than just 4% on the last third of my trade. I want to make sure I'm coming away with about 7%. So I put the stop loss below this candle right here. I say to myself, okay, if it does that, it's probably going to start falling apart, and I don't want to be in it anymore. And check out what it does. Maybe it's going to make its move into the 800s, but no, it starts coming down. And that is where you get stopped out at, my friends. So the last third of the position, I get stopped out at 760.38, made about 7% on that lot, and it turned into a great day trade. A couple hours, a good chunk of change that I made off of the trade. I'm kind of happy for it. And it was a well-managed trade. There was a lot of emotion in it just because of the momentum and the hype. It made me a little bit nervous. I'm not going to lie. I was a little bit scared. Most petrifying, profitable trade I think I've made in years, right? Because it was just like the emotions were running high. You didn't know if all of a sudden this thing was just going to dip 20% on you out of nowhere. Probably wouldn't. But when you're in the trade, those emotions kind of do go through your head. And you can see too that this trade thereafter, what did it do? It didn't do much. It just kept on going lower. So I was able to capture the momentum for the while it lasted. It wasn't a long time. It was about a 3-hour trade. But there was enough momentum there to make a sizable profit, and then since then it hasn't been doing anything. That doesn't mean that there won't be other opportunities in the future, but you got to be patient for them. You got to wait for it. The one that I was able to take advantage of on February 6th in the morning, that was just a beautiful trade setup. The momentum was there. It broke out, but once the momentum fades, you got to exit the trade.